Hi, this is Lex, and welcome to the FinTech Blueprint. It's your podcast about fintech, decentralized finance, digital banking, investing, robo-advice, artificial intelligence, and all the other frontier technology that is transforming financial services. To get more content, like an illustrated transcript of this conversation in your inbox, subscribe at fintechblueprint.com. So without further delay, let's jump into today's episode. Hi, everybody. Welcome to today's conversation. I'm super excited to have with us today Evan Malanga, who is the Chief Revenue Officer for Yuma. Yuma is a really interesting company. It's a subsidiary of Digital Currency Group, of course, which is one of the pioneers in crypto-based investment management. But Yuma in particular is a decentralized AI company affiliated with Bittensor, and we're going to dive into what that means. So with that, Evan, welcome to the conversation.
Lex, thanks for having me.
My pleasure. I kind of just want to get to the conclusion, which is to ask you, what is Bittensor and what is Yuma and why are you working on it?
We can spend a lot of time on all of those things. So let's start with what is Bittensor. Bittensor is a protocol. We like to describe it as the World Wide Web of intelligence. It's decentralized, open source incentive mechanism that enables market participants from all over the world in a permissionless environment to contribute or build towards artificial intelligence projects. You can kind of hear sort of the rhyme with Bitcoin in a lot of ways. It's non-sovereign, it's immutable, hard cap supply, decentralized, global, etc. And instead of doing proof of work in the Bitcoin sense, which is random number generation, market participants are establishing competitions and competing across a variety of use cases to build across the AI value chain, which I think is fascinating. And that's why I'm working in it.
We've talked in the past here about decentralized AI and kind of the value proposition there. We've certainly written a bunch about it in the blueprint. And then out of my fund in Generative Ventures, we invest in the machine economy and decentralized AI. And, I'll start with the sharp question, which is, has decentralized AI worked? Right? Because we're in this world where all of the value of every single market, from infrastructure investment to the price of components to RAM to the price of energy to sovereign debt, literally every single market is going to capitalize OpenAI and Anthropic and maybe a bit of Elon Musk's ambitions. My hope was that decentralized AI was going to be this kind of open source counterweight where privacy, decentralization, all these things matter. Are we in that world? And what has happened over the last few years in Bittensor?
So I would say, philosophically, I'm very much aligned with you. And I think the point you just made around OpenAI and Anthropic, that is the risk here, is that the world across all markets will leverage two companies and the decision-making of a few individuals at those companies to determine what AI model parameters, outputs, training data, et cetera, influence our everyday decision-making, be it in personal or business use. Look at in recent weeks, the U.S. Department of War going to battle between these two companies. And then, you could think about all the different use cases around deepfakes, elections, and things of the like all over the world that, having an open source counterweight really, really matters. And so I would say, kind of over the last 2 years that I've really been focused in this, we've gone from sort of the promise of the ethos. I think we saw a lot of different projects in the decentralized AI space raise money about 2 years ago that we're still kind of waiting to see what those projects bring to market when their TG events occur. But specifically in the Bittensor world, this protocol, if I take a step back.
Just to be clear, I appreciate the vote of confidence that these projects, both that they have a product to bring to market and that their TG will happen. As a crypto VC, I really enjoy those assumptions. Thank you.
I think you're reinforcing the point I'm trying to make, is that Bittensor has a massive first mover advantage. The founders first met and started tinkering on this in 2016. I think Bittensor has already tried and failed and learned of the lessons that many of these other projects are trying to set out and do. So they're multiple cycles ahead of the rest of the market in many ways. And so what I would say 2 years ago would kind of be like the initial discovery, the initial excitement, that ChatGPT moment where everyone was like, okay, AI is here. Now, 2 years later, we've got themes around rebuilding the American industrial base, reshoring, this need for energy, compute, data centers, small nuclear reactors, right? Like there's this new industrial revolution happening around AI. And I think in the Bittensor world, we're growing up. We're moving away from what I would describe as the experimentation phase into the tipping point of maturation. And so to give you like a few succinct highlights, in the last few weeks, one subnet called Templar completed the largest decentralized pre-training run of a 72 billion parameter model. I mean, fully leveraging the token incentive mechanism of a blockchain on the Bittensor network. That's Subnet 3. I mean, that's massive, and no one's really talking about it yet, but it's starting to break into the dialogue. Ridges, which is a AI agent platform, is hitting like 88, 90% of the software engineering benchmarks. It is effectively on par with like a Claude type agent for 5x cheaper the cost, and was built under $10 million of token emissions on the Bittensor blockchain, right? So here's a small 3 to 5 person team being able to do this at a fraction of the cost, fully decentralized across the globe amongst miners, validators, and the subnet owners. Another example would be Score, Subnet 44. They're doing computer vision over 200 times faster than centralized counterparts. Specifically, they're doing a variety of different verticals, but where they started off was sports, specifically soccer, doing like post-game play analysis for managers, coaches to think through game strategy and stuff like that. What would take a lot of people weeks, if not days, if not weeks, is taking the team a handful of minutes, and now has natural language prompting to ask questions around, what occurred in a game and how to prep for the next match, so to speak. So there is a lot of real world use cases, a lot of tangible businesses being built, generating revenue with real customers across the Bittensor ecosystem. And that's just, 3 or 4 of upwards of 128 subnets going to 256 subnets.
These are kind of cool spot checks of capability. I want to rewind a little bit just to kind of set the groundwork for Bittensor for an audience that might not be familiar with it. So Bittensor is a token-based project. It is around 3 billion, give or take, in terms of market cap, or between 5.5 and 6 billion in fully diluted value. So there's still about, give or take, a little bit less than half of emissions that are going to happen. It's AI themed. And I mean, one of the directions I want to talk about is Bittensor decentralized AI, or is it like this financial hyperstructure? And so I'll just describe what the financial hyperstructure looks like. And then I'd love to get an update, because it's been a bit since I've touched the tokenomics. They've changed. They've gotten more complicated. In the beginning, you've got the emissions curve in the same way that you have an emissions curve for Bitcoin, and people can get rewards of these tokens. Obviously, they've got no value unless they have value. And today they have $6 billion of FDV of value. And then the emissions that come out are then directed to different projects, which are called subnets that you had just mentioned. And they're directed through this mechanism where effectively other participants in that network are able to, using their existing holdings, kind of decide which things are worth funding kind of on a periodic basis through the Yuma consensus, which I'd love to hear about. And then people can get effectively millions of dollars of token rewards for doing work that sort of aligns with the decentralized AI mission. And then since then, I think the emissions have gotten a lot more programmatic and attached to business outcomes. So to me, that's like a financial product. It's less of an AI product. Can you guide us as to what the current tokenomic infrastructure looks like? And then what's the connection here to AI other than sort of like what the subnets decide they want to do or not do?
To take it one step back before I dive into this, it's important to know that when this protocol was created and they first launched the token, similar to Bitcoin, there was no venture capital round. There was no large investment with, vesting schedules and things like that, right? Like the founders just launched the token. In order to accumulate TAO, you had to provide work to the network and earn it through the emissions, right? And so that sort of community aspect of people just showing up here naturally, and that organic growth was really important to our thesis, in addition to the parallels to Bitcoin, 21 million tokens, hard cap supply, 4-year halving schedule. The first halving just occurred in December. So you're right, we're just past 50% of the supply being emitted. And so what has changed over time, kind of diving into your question more specifically, is what we went was from emissions were determined by the validators. The validators would assign effectively some sort of weighting scheme. It varied validator to validator to determine the 7,200 tokens emitted a day.
How did one become a validator in the first place? And is Yuma a validator?
Yuma is a validator. To become a validator, you have to, you create a wallet, you register to the network as a validator, but then you have to provide from subnet to subnet the validation function. It varies, so it's not uniform across the network. Each subnet has different validation requirements, and you have to provide that hardware, that infrastructure to validate the work of the miners on each respective subnet. So today there's 128, so it's basically like validating 128 different protocols concurrently. And so there's a couple dozen validators in the network. I'd say roughly like the top 10, top 12 have the majority of the dominance in terms of assets staked. We're about number 3, number 4, depending on the day of the week in terms of TVL on the network. And so, the change in tokenomics you're referring to is called Dynamic TAO. So prior to that, the validators would have basically assessed these weights, and the community realized, and the foundation realized that this wasn't sufficiently decentralized, and we needed to move to more of a markets-based approach. And so in order to do that, to allow any token holder anywhere in the world provide some level of input through their assets as to where emissions should flow, we created Dynamic TAO. And effectively what that is each of the 128 subnets has its own subnet token denominated in TAO, and market participants can buy or sell. Any token holder can kind of come in permissionlessly, trade their TAO for a respective subnet token. The subnet owners, the miners, and the validators earn their fees on that respective subnet in that subnet token. And so effectively what you have is what you're seeing is more of a Pareto distribution, as you would imagine, where market participants are ascribing value to, call it, the top 10-ish roughly have 80% of the market cap, and versus, the long tail 20%. 80% of the rest have, the remaining 20% of market cap. And so it's further decentralized the protocol into the hands of token holders. To your point of this seems more of like a financial instrument than an AI instrument. It does introduce complexity for sure to a new entrant coming to Bittensor. Part of the reason we created Yuma Asset Management to simplify that entry point process for investors and token holders to get sort of a simplified one-click trade approach to getting exposure to the subnets. But overall, I would say this has allowed other subnets that may have gone unnoticed to really build their businesses and rocket themselves into the top 10, because they don't have to deal with, pitching a handful of teams. They can make their announcements publicly. They can manage their own communities publicly, be it through X or Discord, both. And the market's reacting accordingly to various business updates, be it technical or commercial.
Looking at that financial hyperstructure again, to me, it feels, I'm sure you won't like this, a bit like transitioning to a virtuals model, right? So a virtuals model is you've got the main token for virtuals, and then you've got an agent launcher, but the agent launcher has infinite agents. You can have as many as you want, and they can be as thin or as thick, sort of in terms of their functionality. And then each one is tokenized. And then in order to kind of support the creation of that agent and the trading of that agent and the market infrastructure, the virtuals token is required. And so you kind of have the platform, and then you have speculation on the components. Now, in the case of Bittensor, you have a limited number of subnets, and it's actually quite expensive to become a subnet. And once you become a subnet, you're eligible to receive distributions from token rewards. But there's also stuff about, your own token floating and then creating markets between using TAO and your own subnet token. I guess what kind of profile is the right profile for somebody who wants to participate as either a subnet? If I'm an AI researcher and I'm like, this is the best, I want to do it, what are the ways that they would engage?
Yeah, so I would say, first of all, you don't always have to be a subnet owner to participate in the protocol. If you're an AI researcher, the attractive angle here, right, is that you can come into this network without going out to Silicon Valley and having to fundraise a business, hire employees or anything like that. You get companies like Yuma. There are others that provide funding to get on. So we'll pay the subnet registration fee. You can also buy one from the protocol directly. It deregisters an existing subnet. That's sort of the design. And there's talk of the cap extending from 128 up to 256. I don't know when that will occur, but it is being discussed in the community. But effectively, what you get is a handful of things. Number one is you can tap into a few $100 million of annual incentives, right? So that's paid to the subnet owners, it's paid to the miners, it's paid to the validators, right? So as asset prices in a dollar, TAO to USD basis move with the markets, TAO at 300 versus TAO at, 500, 1,000, whatever, that starts encroaching in like $1 billion of annual incentives up for grabs every year, right? So there's meaningful dollars at stake. If you compare that to some of the more centralized kind of Web 2, it's actually quite comparable. Second is you get access immediately if you're a subnet owner and you define your problem statement, you get access to 256 miners anywhere in the world competing against each other to earn as much of your specific token, and you don't have to pay them, right? It's fully subsidized by the network. It's fully incentivized by the network. You don't have to go hire them. You don't have to pay them or do anything, recruit them, provide them employee benefits or anything like that. It's fully decentralized and it's continuous, right? So you get this continuous iterative model where you can constantly improve whatever it is you're doing. So most subnet owners, kind of get punched in the face a little bit when they first launch. It's naturally kind of a exploitive type network or another term would be like a GAN, an adversarial type network by design to have the best competitors, sort of rise to the top. And so you're getting the best outputs for whatever your prompt is. And those miners are getting rewarded. And the validators serve as sort of the judge, right? Sort of ranking the miners against the prompt statement and allocating tokens accordingly. And so you get all of this in a totally permissionless environment. You also are starting to see network effects across Bittensor where other subnets are tapping into the work of adjacent subnets to build upon. To succinctly describe that, you get access to hundreds of millions, if not billions of dollars of annual emissions, continuous improving system, access to hundreds of miners all over the world, fully subsidized by the protocol, and immense and growing network effects between you and other subnet owners as well.
Can you elaborate on how the sort of proof of work-like mechanism is actually evaluated? Like this evaluation of work done against the problem statement, like technically, how does that work?
Yeah, so this is slightly where it departs against kind of the Bitcoin analogy. The example we use is you kind of have to think of the subnets as like the Olympics, right? Everyone's competing, but no sport is the same. So let's use the Winter Olympics as an example, like a cross-country race is different than figure skating, right? Like how you win, how you get the gold medal, and what is required of you as a competitor is totally different. And so you can think of subnet owners as like the Olympic committee. They're setting out the competition. So you've got training at home, you've got data scraping, data validation, you've got computer vision, AI agents, prediction markets, kind of science type things like protein folding, drug compounding. So you have all these different use cases. And within that, the competition is not necessarily linear. Some of these competitions are winner take all. Some of them are more designed to be more of a Pareto distribution. There's different sort of designs within the incentive mechanism in of itself. But your miners are your competitors, they're your athletes, and the validators are the judges. So when you think about like if I'm asking a subnet, if a subnet is asking miners to produce social media data within a certain time window or a certain topic, the validators are just verifying, is that data, does that meet the prompt, and how quickly were those queries returned to the subnet owner? It's a tough question to answer because it's not so uniform across the network, but I think the Olympics analogy is a helpful framework to understand.
Let's talk about Yuma for a moment. In my mind, thinking about Yuma is sort of similar to thinking about a Bitcoin miner in 2012. We've had a couple of years. There's been returns. We know what the infrastructure is, but these things can grow into tremendous size. but the business model is kind of still evolving and it's new for a lot of people. How do you think about it? And what was the origin of creating this entity?
I think kind of going back to the sort of the DCG Bittensor origin story. I mean, this was, I think 21 or 2022, we made our first investment buying tokens OTC from the foundation. And at the time, our other wholly owned subsidiary, Foundry, was running all of our infrastructure. And Foundry has the largest Bitcoin mining pool in the world. They did equipment financing for mining machines and stuff like that. So it naturally fit within that business at first. And so they spun up a validator and started validating on the network. Kind of fast forward to 2024, as we were thinking through, kind of the strategy of what we wanted to incubate next, Bittensor was something we already had high conviction in and was like a natural starting point of let's look there and see where, what we can do, what role we can play. And the short answer really is, at the time, we realized there was a lot of barriers to entry to get on the network as a subnet owner. And so running a subnet acceleration business made a lot of sense by providing the TAO to get teams on the network. And that's sort of where we started to find initial product market fit. We started to see a lot of demand of subnet teams coming to us for capital. The validator was a natural kind of complement to that business. And so we combined those two efforts to form Yuma. And Yuma's objective is to grow the Bittensor ecosystem and increase network adoption. And so we're doing that in a variety of different ways. As I mentioned, we offer an accelerator to lower barriers to entry for subnet teams to get on the network. The validator, we have a partnerships effort with other crypto providers, custodians, wallets, exchanges, to get institutional staking available to more sophisticated platforms versus using sort of the command line interface, which is what it was originally a couple of years ago. We self-mine, so we have a one-person mining team that's doing some proprietary mining across the network, but we don't have a broader sort of externally facing mining business at the moment. And then we launched, when Dynamic TAO happened, we launched Yuma Asset Management, which is, we have two fund products, a subnet composite and a large cap product, which effectively are you can kind of akin it to the S&P 500 of subnets, where it's, market cap weighted rebalances on a regular basis to give investors, to reduce the barriers to entry for investors to get exposure to the subnets, right? So it's a simplified product, and you in addition to not only the price appreciation, you get the benefit of the staking rewards as well within that. And so we've seen a lot of success across all four business lines, but the nexus was really about growing the ecosystem. Is how can we be a force for good? How can we continue to support this protocol and its growth trajectory and get more teams, more builders, more investors excited about it? And, a lot of that playbook comes from what Grayscale did with Bitcoin and applying it here with Bittensor with Yuma.
If you were to sketch out the future of the Bittensor protocol and Yuma, DCG is famous for being first to a real large scale Bitcoin trust product that defined a good 7 years probably of the crypto industry as almost like the heart of institutional investment. What do you think things look like for Bittensor and for Yuma from here?
For Bittensor, we've been, the community talks about this. I talk about it. We've talked about it today. Is AI is the main use case. But if you really think about what this protocol has designed, is really like a global coordination engine. And so although AI was sort of rooted in the founders' core DNA from their career experiences prior to starting the protocol, and it's attracted sort of AI builders at first, I really think if you look 3 to 5 years out, Bittensor could be coordinating all types of work, all types of use cases. It doesn't have to just be AI. You may be an existing business that has some R&D challenges and you spin up a subnet, you run some prompts, you kind of run some modeling, and then maybe you don't need it anymore and you shut it down, but it provides value for you. Or maybe you're, a startup that's looking to kind of create something new and novel that never existed. And, Bittensor enables you to do so in a very cost efficient way, right? So AI, I think, is kind of where we're finding the wedge currently, but I think this can be much bigger than AI specifically. And I think the role of Yuma within that is to continue to be that institutional entry point. We want to be the go-to phone call for anyone looking to build, invest, get sharp and get smart about this. We publish reports. We just launched our second State of Bittensor. We're publishing regular kind of data, what we're seeing in sort of the asset management products. And so we want to be a data resource for parties interested all over the world. about what is going on and continue to support the growth of the network.
We talked before the call that you and I actually share quite a bit of, let's say, institutional history between the Columbia MBA, the time at Consensus. I mean, you were also at Securitize. You've had this background of seeing where things are going, right? And kind of positioning ahead of the curve. And I think in many ways, Bittensor is trying to do that. Like it's imagining a world where the $1 trillion of value isn't going to the Musk organization or the Sam Altman organization, but is rather going to all of the holders of a particular token that want to guide the development of these profoundly fruitful technologies. There is this danger, and I think this is a bit of just my own thinking recently, of figuring out where the value accrual is in these plays and how to position for them and how to find them, right? So like if we think back to the early Consensus days or the Securitized days where, 2019, 2018, 2020, all this work is being done in terms of pioneering research and proofs of concepts with every single bank around digital assets and central bank digital currencies at the time, like working with the payment networks and issuance of private credit, like all the ideas that we see today were happening back then. But then you fast forward into 2026, and I think the biggest winners of tokenization, as far as I can tell to date, are like Circle at 50 billion and Tether at 200 billion or whatever it is, right? Whereas a lot of the other companies of that time, I wouldn't say got left behind, but are looking at smaller outcomes. And then similarly, like you look at the pioneering work that DCG is doing, and now a lot of the large institutionals have come into the space. And like whenever we talk about Bitcoin as an investment vehicle, you've got kind of like Larry Fink and Jamie Dimon as the poster stars for that, which to me is like obscene, but nonetheless is sort of what it is. And now we're in this third wave that you're seeing around AI and the value expansion there. And if we look at kind of like investment returns, at least in 25 and in the beginning of 26 for AI, and I've sort of set this up a little bit before, but if you really look at the value chain, most of the sort of value accrual is going to energy companies, it's going to component companies, to the chip manufacturers, and to the folks who train models, and doing that in sort of like an extreme way. And I guess just in terms of soul searching and thinking about the future, how do you square this like being right but being early and building exposure but maybe doing it in a way that's philosophical or focused on ideals versus how these things actually end up playing out, how the winners actually end up growing into these behemoths? Like, any thoughts on just that story, and then any ideas on how to navigate it?
Yeah, no, I mean, the story really resonates. I mean, we were talking before the call started, but the industry uses the term real world assets or RWAs, but back then we called them STOs or security token offerings. And like, we were doing a lot of novel things like tokenizing a hotel and whatnot. And, you kind of needed that moment to happen first before we figured out how to tokenize treasuries and whatnot as the sort of evolution has matured over time. And I think the same thing will happen in these markets too. I mean, just as much as there's been shakeouts in crypto, albeit they seem to be more newsworthy, they seem to be shorter, like every 2 to 4 years than say other industries. Like there will still be shakeouts in the regular Web2 AI industry. And, there's a lot of teams raising a lot of dollars, and that value will not accrue to every single one of those teams. And I think the markets parallel each other, just maybe the timeline is a little bit longer versus a little bit shorter. And that said, I think generally speaking, the vision has always been there. It's just the distance to realizing that vision may not be tomorrow like most people think. Bitcoin was 2009. I mean, we're 15 years into this, and we finally have, as you mentioned, like Larry Fink and Jamie Dimon talking about this. I mean, it may be 15 years before Elon Musk and Sam Altman are talking about Bittensor. That's totally feasible, and there will be peaks and valleys in between, and there will be teams that come and go. But I think there will be things that happen in society and the world that will continue to drive more desire for open source AI. The token-based incentive is a great structure to bring people into the ecosystem. And moreover, I think we're going to see a lot of incidences with AI kind of impacting people's lives in a negative way. I mean, I'm still a bull for the technology, but if we're leveraging AI for, say, medical decisions or therapeutic decisions or whatever the use case you may have, maybe it's legal analysis and the output is wrong, that maybe that boils up to a decision made at one of these two companies, right? And so people will want inevitably over time there to be greater competition and more transparency when it comes to this type of stuff. And so I think it is a matter of time, but yeah, it does feel very early. So we've got the vision, as you said.
When you think about other things on the horizon, are there any other green shoots that you're seeing beyond kind of the story of creating an AI alternative? Like, are there any weird and novel and interesting things that are popping up for you that you're starting to get kind of like your second sense on?
One of the things that has kind of been a bit of a start and stop within this ecosystem, and probably maybe crypto more broadly, is kind of I think the industry lingo term is called DeSci, right? Decentralized science. But what I really do think is quite interesting, some teams have tried and failed. Some teams still exist within the network, but leveraging this as a way to do something you couldn't otherwise do in sort of the real world. Like if you wanted to compound DNA sequences or drugs or proteins or whatever, right? Like in Bittensor, you can continuously every 12 seconds issue a new block where you're having miners respond to queries and just like very quickly building up massive data sets on things that would otherwise be like very manual, very labor intensive. And I think that's really unique. We haven't kind of figured out the business model around it yet, which is why some teams have struggled. But I think that kind of similar to the hotel analogy I used earlier, is kind of like we need that to come and we need to fail and learn the lesson. But when it comes around again, I think it'll be immensely valuable. And teams, be it decentralized or centralized players, may want to leverage that type of data and that type of experimentation for whatever business purposes they may have.
Yeah, I think we're also, like, just to riff on that, we're seeing a lot of open source AI papers coming out of the top researchers who sort of, there's been like this reshuffling in the world because Web 2 is funny actually to see like how people's roles have changed just even in the last 20 years, right? Like you used to have finance people at the front of the house and they're making all the money, and then you've got IT people in the back, in the basement, running like the servers for Wall Street banks. And obviously that's flipped completely, where the technologists and the developers became huge superstars, and the finance people are now like doing special projects in finance and operations inside of their companies. But I feel like over the last few years, we've had another switch from the Web 2 model where the people that had the most traction and visibility were like these empathetic product leaders or go-to-market people who had intuition for where demand was. And then between both crypto and AI, I think that has flipped completely. So like the people who are extremely deep technically in either cryptography or machine learning or neural network architecture and then transformers and so on, like the heavy technical people are getting recruited by Facebook for like whatever it is, $100 million contract, right? So like the value has finally gone back to like the highly technical creative people. And I feel like a bunch of them made enough money now that they just get to research what they want. And the stuff that's coming out is, how do we get a rapidly improving recursive mathematics researcher or protein folding researcher or like, biotech stuff. And we're just sitting in front of this completely insane explosion of technology that we couldn't even imagine.
One of the learnings we've had is there are a lot of people sitting at the Metas and the Googles of the world that are mining Bittensor on their nights and weekends. And you're right. Like if you are that technical individual, that researcher, you have this opportunity cost of I can do something and maybe get hired by Meta for $20 million with like, an insane compensation package. But if I'm also the top miner on say ridges or shoots, I can be making $30,000 a day kind of thing. So there are parallels. It's just not well known enough yet. and it's still very much in sort of the cypherpunk kind of crypto world, but it's slowly starting to break out into more of the mainstream.
We're definitely in science fiction land. And it's one of these things where the more you know, the stranger it feels and is. And I think Bittensor, it can be a really confusing project if you're coming at it from the outside. But at the same time, it has been a project that has maintained its value in a pretty bad bear market and through it and then recovered, which, is not the case for a lot of other decentralized AI protocols that went up really fast and then melted. And I think that speaks to a large amount of different activity that's on Bittensor, as well as the capital depth of the players involved. So, for anyone listening, I would definitely recommend that you go deeper and check out what the protocol does, as well as what Yuma does. So, Evan, if our listeners wanted to learn more, where should they go?
I'd say the best starting point would go to yumaai.com. Go to our website. We have the State of Bittensor Volume 1 and Volume 2 there. Volume 2 we released about 10 days ago. It's kind of got the latest and greatest coverage of the protocol. Follow us on X. We're posting kind of updates, market color that we're seeing on a regular basis as well. Those are two great places to start. And if you want to go deeper, fill out the Contact Us form and we can figure out a way to work together.
Fantastic. Thank you so much for joining me today.
Thanks, Lex.
Hi, everyone. That's it for this week's episode of the FinTech Blueprint. For more technical deep dives into all things FinTech and decentralized finance, check out fintechblueprint.com and grab a free subscription to the newsletter. This is Lex, and I'll see you next time.